Welcome to the Sellernomics podcast, sharing valuable tips and information in the Amazon and e-commerce space. Each week, we deliver the best interviews with some of the top Amazon personalities in the industry to help you grow your business. Today's episode is brought to you by GETIDA, the global leader in FBA auditing and reimbursements. And now, here is your host, Rob Stanley.
Hey everyone, Rob Stanley here with Sellernomics podcast. And today we've got a really good one, so you got to stick around. We're going to be talking about how to increase your Amazon ROI by 50% with no risk. I know that sounds interesting, and I know it's probably a catch, but I guarantee you that there's going to be some great information because we got Don Henig, co-founder of AccrueMe on. How's it going, Don?
It's going great, Rob. Going great. I'm excited.
Excellent. Yeah, and so am I. So it's great to have Don on to kick off our 2022 podcast and our videos. Obviously, we are going to dive straight into this, so you don't need to wait around for the end. We're going to jump straight into this for sure. Don, obviously, I know a lot about Don, and we will talk a bit about him towards the end. But I want to jump straight into talking about this, maximizing the ROI. Tell us the big picture, kind of AccrueMe, and what makes AccrueMe so different, and then try to tie that into a little bit about this ROI.
Sure. So, AccrueMe is something that's completely different than anything that's ever been done. We've all seen, lending and, banks and everything for 2,000 years. They've been charging interest, and they've been, you go for a loan and you're looking at what's the term and what's the interest rate and what's the monthly payment. And, that has all been good. But when you think about Amazon sellers and how well they do for the most part and how much profit they make on a regular basis, why would you take money out of your business to send it to a bank or a lender when you're trying to grow? Loans are perfect for companies that are, doing okay and they want to make their monthly payments, and maybe they want to grow a little slow. But if you want to really grow and grow the hell out of your business, if you want to take it from 100,000 to 600,000 in a year, or if you want to take it from $1 million to 2 million, let's just say, in a year easily, that's what AccrueMe does. We're all about growth. We're about helping profitable sellers grow wildly. So our model is different. So we don't charge any interest. We don't charge any fees. And the reason we don't charge any fees, we could, but the reason we don't charge any fees is we want to make sure that there's nothing hidden. Everything is on the table. So there's no interest, there's no fees, there's no monthly payments. All right. I know people sound like, oh, come on, no monthly payments. There's no monthly payments. So we have clients that have been working with us for almost 2 years who haven't made a single payment. That's a fact. And what do they do if they're not making payments? They're growing like this. They're going through the roof, and one after another after another. It's exciting to see. So that's really the biggest difference is the no monthly payments. You can just grow like wildfire that way. Yeah. So it was kind of weird right there, Robbie, looking at my face in the screen. I'm like, oh man,
that's okay. That's okay.
That's
okay.
That's
so
really
yeah,
what
Don,
we're all about.
Yeah. So Don gave a nice little high overview. We will dive deeper in, and he will give some more information. Let's first, just because, there's a lot of people listening, let's just kind of go over what is a good candidate for AccrueMe and which ones are not. And then after that, we'll start to dive a little more deeper into, kind of how AccrueMe works and everything. But go ahead, Don. What's a good candidate?
Sure.
What's
Because at this point in time, most people are saying what all of our clients said is, what's the catch? They've
you stole my line, Don. You stole my line. Let me delete that off of my questions. Go ahead.
But we literally just sent out a survey to all of our customers, and we said, what are we good at? What are we bad at? How do we explain it better? This and that. What were your thoughts? What was the number one thing that you were concerned with in joining AccrueMe? And I'm going to say at least 90%, if not 100%, said, we just couldn't figure it out. It sounded too good to be true. What's the catch? We couldn't figure it out. And then once we joined, we realized there was no catch. It is as good as it sounds, and it's exciting, and they're all growing like this. So who are the best clients for us? If you're a seller that's profitable If you're unprofitable, you're not going to work well with us, but because you don't want leverage if you're unprofitable. But if you're profitable and you want to grow, then this is the best opportunity that you could ever have. There's nothing else that comes close to this. So really, that's really what it comes down to. Our clients, small and large, and we go down as low as $10,000. So, and we do that because we want to help sellers. So we'll approve them for $10,000, even if they only take out a minimum of $5,000 to start. That's fine. We love. I was just looking at one today. We gave him $10,000 to start. He started with us about less than 18 months ago. He started with us last August of 20, and his monthly income was about $2,000 a month. His monthly profit was about $2,000 a month. His total worth of the business, all right, his inventory, his receivables, and his cash was $33,000. Here we are, like 16 months later, and his profit has grown to about over $40,000 a month. That's game changing. That's game changing for him. Amazing. And the value of his business went from 33,000 to over 180,000. I mean, it's just unbelievable. So that's what we do. And so many times we look at this and we're just so excited. We're rooting for our sellers all the time, but we have a handful that started out just iffy and stayed iffy. And it's a shame. And we want to help them any way we can. But the vast majority, and I'm going to say well over 90%, grow by at least double, triple, and quadruple in the first year. And then they do the same in the second year. It's beyond belief. It's exciting, but it's all true.
That's great. That's awesome. So we definitely appreciate it. Hit that thumbs up or that like and subscribe. You are getting a couple shout outs here, Don. It looks like Don Henig is the man. He is the man. You're absolutely right.
Eric.
Nice. So yeah. A lot of you probably either know or don't know. I actually did work for AccrueMe for a while, and it was absolutely great. Loved it. Loved the model. I'll definitely be jumping in and answering some stuff too. But Don, why don't you kind of just let's kind of go through the process. Like, how does AccrueMe work? I mean, we do want to get into things on, like give some examples of stuff, but let's talk a little bit more because we got a lot of people listening right now. They probably want to understand better how it works. What is it used for? What should the loan be used for? How to improperly use the loan, and I call it a loan, but it's not a loan. It's a partnership is a better way to put it. So why don't you kind of go through that process of it and explain the proper use and the incorrect use?
You got it. So I'm just going to step one step back first, and our model is based on the same premise that GETIDA's model is. It's all about the seller winning. It's not about us winning. We only win when the seller wins. GETIDA only wins when you win. That's it. If you don't make money, we don't make any money. We get nothing. You owe us nothing. How crazy is that? That you'll never find this in finance. Nobody in finance would ever do a model like this because it protects you from the downside risk. Every seller, I don't care who you are, most sellers, let's put it that way, will have great months and a few bad months. And those bad months, let's just call them maybe a break even, sometimes dipping below the line, right? Not making any money, losing money. Well, the worst thing in the world is to have to take money out of your business and send it off to some lender when things are not good. Anybody in business has had to do that. It's a rough thing to do. With AccrueMe, things don't go well. You're not sending us anything, number one. You're not making any payments, but we didn't earn anything. So you didn't actually have, lose any money, if you will, to us. We're your partner. So we're, in this together. So here's what we do. Instead of lending you money, we invest money into your business. All right. And we invest it on a temporary basis for as long as you want. You don't have to decide of a term or anything like that. We give you whatever the number is, $10,000, $100,000, $200,000, whatever it is. We give you $10,000 today. You make no payments. You have no interest, but we earn a percentage of profits for that period of time as long as you use it. And in 3 months, you decide, hey, AccrueMe, this is not for me. Here's your money back. Okay, thank you. All done. We don't own any of your business. End of story. You come back and say, oh my God, I am growing like wildfire. Can I have more money? It's in your account in an hour, literally in an hour. Because what are we about? We're about growth. We're about helping you grow your business. So that's really all it is. And the way the profits work, it's very simple. We set it up again so that you only win. You can't lose. You can only win with us. So here's the way that works. Whatever percentage of the capital we represent, and by capital, let's just think about inventory at cost. All right. So think about what your inventory at cost is. And then add to that what your receivable from Amazon is. Okay. And then add to that whatever cash is in the bank. And again, I'm just going to keep the numbers small for today, right? Let's say that's $10,000. All right. You have $7,000 of inventory and $2,000 of receivable and $1,000 sitting in the business bank account. You have $10,000. We'll give you $10,000. If that's $100,000, we'll give you $100,000, whatever the number is. So let's just say it's $10,000. We give you $10,000. That's the most we'll go. We don't want to have more money in the business than you do. So we'll be 50-50. That's the highest we'll be. So what does that mean? It means that whatever our percentage of capital is, so in this case, 50%, cut it in half. All right. So now we would get 25% of the profit for that month, and you get 75%. We are no profits. We are no profits for the first 30 days, by the way, just to give you a heads up and a head start. So we get 25%. So what does that mean? So let's say you're earning $2,000. I'm sorry, 20%. And so that means you're earning $2,000 on your 10%, $10,000. So you have $2,000 of profit. Now we give you $10,000 and you're going to earn another 20%, right? You're going to earn another $2,000, all well and good. So if AccrueMe gets 25% of that $4,000 now of profit, that's $1,000. So you now have $3,000 and AccrueMe has $1,000. You get that? So now what just happened there? You increased your profit by 50%. You went from $2,000 of profit on your own to $3,000 of profit. Did you sign a personal guarantee? No. Did you owe anything? No. But AccrueMe's $1,000 will let leave in the business and let it accrue. So instead of AccrueMe having a $10,000 investment, if you choose for us to accrue it, it'll just stay in the business. And now you have $11,000. So if it's a bank, instead of starting at $10,000 and taking $1,000 out, let's say, to send to the bank this month, now all you have is $9,000 to try to grow with. With AccrueMe, instead of starting at 10 and going to 9, you started at 10 and you went to 11. It's fantastic. So we grow with you as long as you want. And the idea is that you pay us when it's right for you and your business, not when we want, when you want. All right. Again, this is not like finance. This is different than anything that's ever been created. So what typically happens is, some of our clients, they obviously, and then nobody's paying in Q3 and Q4, but coming the end of Q1, beginning of Q2, just about everybody's flush with cash. Pay us down and our profit percentage comes down. Everybody wins. We get some money. You owe us less on a percentage basis. Everybody wins. Then 2 months later, you need more money. You let us know and it's in your account in an hour. And that's just the way it works. You can't lose. So if one thing on the $1,000, Rob, go ahead. On the 25%, and that's the highest it will be. If we give you, you have 7,000 and we give you 3,000, right? Or 70 and 30, it doesn't matter. So now we're 30% of the capital in the business. Cut that in half. We only get 15% of the profit. If we're 20% of the capital, we get 10% of the profit and so forth. And it adjusts every month. So, and if you think about that, what's really happening? What's really happening is almost, and Rob, I know you and I have talked about like the rich uncle program, and it really is the truth. If you had your business right now, and again, I'm using small numbers, $10,000, and you went to your rich uncle and said, hey, I really would like $10,000 to help grow my business. Would you help me out? Yeah, I'd love to help you out. I love being the rich uncle. Here's, I'll give you 10,000. What are you going to give back to me? You know, am I going to get an interest rate? No, I don't want to pay you any interest. Well, I can get interest, anywhere.
What about ownership? I want ownership as a rich
uncle. I
uncle.
want ownership. What do I get? Like 20% of the business?
Yeah.
No, I don't want you to have any percent of the business. Well, how quickly are you going to pay me back? I'm going to pay you back whenever it's right for me and my business. So no monthly payments? No. What about quarterly payments? No. All right. They say you're crazy. Get out of my house.
I don't want to be at that family dinner.
Yeah. Who wants to do that? But that's basically the model. Here's the money with no interest, no payments, no fees. We don't take any equity in your business. You don't sign a personal guarantee. This is just a business transaction. That's not a personal transaction. So there's safety involved. If you would have put something together that you would absolutely want, this is what you'd put together. And that's Absolutely. What we did. We put it together as if we were sellers saying, how would we want this to go? And this is what we put together. And now as a result, and we didn't expect it so much, we expected sellers to really be able to grow, but man, they are growing like wildfire. It's crazy. It's so exciting to see.
All right, Don, I got more questions for you. And I know Don and I could sit here for an hour, but we got a quick commercial break. But when we come back, we're going to talk to Don a little bit about improper use of AccrueMe's money, what not to do. And then we're going to also talk a little bit about, can I use this money to go buy new products or create new products from China and bring them over? We're going to do that right after this quick break. Thanks, Don.
Great question.
Today's episode is brought to you by GETIDA, the global leader in FBA auditing and reimbursements. Get $400 in free FBA reimbursements at GETIDA.com/Sellernomics.
Yeah, so head on over.
Now that was a good commercial.
You like that? Yeah, it was pretty good. Head on over to GETIDA.com/Sellernomics. Get your first $400 in FBA reimbursements. So one of the things Don mentioned is, GETIDA, we are a profit sharing type company, meaning that when we recover money for you, that we basically get a share of that money. Kind of think of that sort of concept a little bit when Don is given that scenario. And if you're not quite clear, post a question or we'll tell you how to get a hold of Don here. But I do have a couple of things I want to talk with Don about. The first one being, let's talk a little bit about the proper or improper use, what not to do when you get the money from AccrueMe. And then let's also talk about, what was the other thing I was supposed to talk to you about? The improper use of the money. And then also, should I be using this money or can I use this money to create new products to sell on Amazon? Don, start with the first one on the wrong way to use the money from AccrueMe.
Well, the best way to use money from AccrueMe, because again, we're all about growth and profit. That's what we want to see, is to buy inventory that you're going to make money on. If you don't know you're going to make money on it, be very, very, very careful. You have to really know. So with that, I'm going to just step back for half a second. We work with private label sellers. We work with wholesale sellers. We even work with retail arbitrage sellers. And in fact, we love all three. We really do. People get very surprised. And we work with people on Amazon.com, no matter where they live. They might be in the UK or Australia or wherever. If they're doing business on Amazon.com, that's totally cool. And then we'll be opening up other countries as well. So the improper use of AccrueMe's money is for, not necessarily it's improper, but it's not the best use. The best use is to put it back into inventory to grow. But, some people need to take money out to live. You're growing your business. You use the same example. You have 10,000. I'm keeping the number simple, 10,000 and a 20% ROI. So you're earning $2,000. Well, what are your monthly bills? Let's just say they're $1,000. Every month you have to take that $1,000 out. So, you're growing extremely slowly. But now with AccrueMe, that money stays in and you're able to take the $1,000 out easily and grow literally at double the speed. So, that's, you have to live. But if you took all the money out and never grew, it's not what business is supposed to be. Let's grow the hell out of these businesses.
Yeah. It sounds like what you were
Right.
saying, Don, and just to clarify to everybody, what Don's trying to say is that if you got $10,000 and you only need five, only take the five. The
Right.
other 5,000 is still available there to you to take out, but just take out what you need as you go. And that's one thing that
Yeah.
Don told me when I was working there. Like, one thing you should tell them: don't take out the 10,000 and put it in your own bank and it just sits there doing nothing. You want to use that money to help grow your business. Only take it as you need it, and that is one of the best ways that AccrueMe can help you.
So you see, that was a setup, and I didn't even know it. I forgot it.
It's all coming back to me now.
That was really good, Robbie. That was really good.
I appreciate that.
You're absolutely right, because we don't want people to pay us a higher percentage of profit than we deserve. If you're taking money out and just leaving it in the bank, that's not good for anybody. It's not good for your business. It's not good for us. We don't want that. Take out just what you need and grow the hell out of your business. And when you need more, we'll give you more. It's just that simple. Even monthly, every month we'll give you more. We love to do that. And what was the other question, Rob? I don't remember.
Yeah. So I'm going to get to the question here in a second. We did have a couple of shout outs coming out to you, Don. Tim. Don is the man. We know Don's the man. Everybody knows Don. But we did have a question actually come up. Well, Tim
was one of our sellers, and just a great guy. Love him.
That's awesome. Well, everybody who's listening, make sure you hit that like, subscribe, that thumbs up. We do appreciate it. Helps out the Sellernomics podcast. But Tim also said that this should be a standard when it comes to getting help for your business, truly helping people. Thank you, AccrueMe, for setting this and giving a huge opportunity to sellers, and that's 100% true. So
and Tim's a seller, and he knows what he's talking about. And Tim, thank you so much, man. He's the best.
Yeah, thanks, Tim, for joining in and listening in. We do appreciate it.
I really appreciate it.
One of the questions I got asked a lot of times when I was talking to sellers when I was at AccrueMe is, can I use this money to fund a new product that I'm thinking about getting? Don, I know the answer, but Don, I'll give you this one.
All right. Well, quite simply, we don't finance new products, but we finance your overall business. So you can take money out of the business and you take the risk on that new product. Once that product is profitable, and we look for it to be profitable just for 2 months, so it's not a big obstacle to get over. Once you're profitable, it's included as capital. We'll give you money against it, and now start your next product. Take some money out, create your next product, make it profitable, and we're right in there with you. But while it's excluded, if you will, right? So, you're putting the money in there. You might take it out of the business to put it in. That's fine. And you're building that product. Any profits that do come in on that, they're yours. We segregate it completely. It's all yours until you're ready, and that's earning a profit, and to put it into capital, which just makes sense. And then there's much more money available to you at that point. So that's how we do it.
Excellent. So yeah, there is ways to do that. Obviously, like I was kind of saying earlier, it's a profit sharing model. So they want you to be successful, just like GETIDA wants you to be successful. And we'll look for all the issues that Amazon are doing in the warehouse and things like that. Whereas on the other side, Don's helping you basically grow your business, increase the ROI on your company. So Don, speaking of that, let's get a little detailed into, how about an example? Give us an actual real life example of a customer you've dealt with, any sort of details you can give us on that, how it worked out, where they're at. Are they still with you guys? Give us an example here.
I can give you a bunch, but can I share my screen for a half second?
Should be able to. Yeah, go for it.
All right. Let me just do this. Give me a second here.
Yep, we're going to give Don. You know what? Why don't we do a quick break, and then we'll come back, and Don will share his screen. Everybody can take a look at something that he has here to share with everybody, and we'll be back in just 1 second.
Did you know that Amazon probably owes you money for FBA reimbursements? Get $400 in free FBA reimbursements at GETIDA.com/Sellernomics.
Yeah, so head on over to GETIDA.com/Sellernomics. Don, at the bottom of your screen, it should say share. You should be able to pick one of those screens.
Oh, it's not. You're not seeing it?
No, not yet. It should pop up when it's shared, and I can share that with everybody. If not, we can kind of describe it to everybody. I'm still not seeing it yet.
Wait, okay, here we go.
Here it comes. All right. So,
Did it happen?
well, now we see your screen, Don.
Oh boy. Here we go.
That's all right.
How's that?
There we go. That's what we're looking for. All right.
All right.
So make sure to also kind of just tell everybody what we're seeing, Don, just in case they're listening in. Go ahead.
So I'm just going to show you a couple of slides of, and these are not recent right now. These are, if they were recent, we have to update them. They're much, much better than what we're even showing you here. But I think it just gives a good feel for, what people can do here. So in this situation, these are all real customers. So this one is a wholesale client. Our initial investment was $25,000. So they're still active after 26 months. All right. They profit in month one was $2,700, and after 9 months, just about $8,000. So nice increase of almost 300%. And this seller, during this period of time, in 18 months, they never made a payment. In 18 months, they never made a payment. But during that 18 months, they had to live. It's a husband and wife team. I just remember who they are. They took out $114,000 out of the business in that period of time to live. All right. Without making a single monthly payment to us. And then in the 19th month, they paid us $2,000. Then they paid us $3,000. Then they paid us $5,000. Then they paid us $10,000. And the whole reason being is that they grew their business, as you can see on this chart, so large, they were flush with cash. They had all the money that they needed. So they paid us down. Our profit percentage came down. They are still on board. It's, well over 2 years now. And they're just killing it. It's fantastic to see. But you can imagine, how are they going to live on, $2,700 a month? Not. So, moving on. All right, this is another wholesale. So just going back for a second, you see how small the AccrueMe profit percentage was to begin. And it stayed small. And the idea here is that you could see how big this seller grew and how much more of the profit that they got every month versus AccrueMe. And that's exactly what happens pretty much in all cases. So here we have another wholesale seller. Our initial investment was $37,000. And again, in 9 months, it went from $2,500 to $13,000 a month in profit. They doubled their profit just 3 months after AccrueMe started with them. And you could see how they dipped down here and we dipped down. They're killing it. We're doing well. Everything is good. They increased the value of their business from $33,000. Actually, this one I know, they went from $33,000. Today, it's up to $182,000 value in their business. All right. Just their end of the business. $182,000 from 33 in about 16 months. Here's a private label business. Interesting if you look at this. So we put in $20,000. They're still active. They went from $3,000 to $11,000 of profit in just 5 months. All right, tremendous. And they had problems. So look at this. They started out profitable. Then they dipped down. They lost money. All right. So what did we do? We helped them out. We worked with them on rearranging their business a little bit through some challenging months, and they got them back on track. And I don't want to say we did it all. They did it, but in consultation with us. Very often we'll bring in some expert from outside of our company, although we have plenty of experts inside. But if somebody's got a specific issue, we'll bring in somebody from outside to help them grow. We're their partner. We want them to win. So you can see they went from being just okay to dipping down, losing money, and now up and killing it. So, and I'm not going to do them all, but you can just get a feel for what's going on.
I love you showed that, because that last chart, that's realistic, right? There's times there is companies that they have a bad month, or maybe it's a bad month or two, and they redo things or they get help, seek help, and then they excel after, getting that help, that proper help. And I'm glad you showed that, because, sometimes people always want to avoid it's not a negative. There's nothing negative against them. They need a little help. They had a bad month. It happens. It happens.
But, the thing is, they didn't have to take any money out of their business and to send to us, and they didn't owe us anything. We didn't make any money either. It's, we're in the same team. I'll tell you,
Absolutely.
we had another one of these is a private label client who had a good month, a bad month, a good month, a bad month. And we helped rearrange their business a little bit and introduce them to a wholesale supplier with some great products. And next thing you know, they offset their monthly cash flow problems from their private label with some wholesale sales that just continuously grow. And so they have cash flow and profits every single month. And their private label now has much more power behind it for them to increase their number of products.
That's excellent.
Yeah, it's just great. So you can get a feel for it. Let me see if there's another. Here's another one that, since you brought it up.
We do have a couple questions that came in, but go ahead.
Last one I'll do. Let's see. So here's a private label. They started with a very low profit, barely any profit. 9 months later, $5,000 a month, pretty tremendous, doubled their asset values. But you could see they were going very slow initially. Give them the money, they did a little bit better. You could see AccrueMe just had a little sliver down there. Then they dipped down, and we helped them adjust their business. And you could see what's happened here. They just took off. And I will tell you right now, this business is booming, absolutely booming now. Like 5 times that size. Anyway, I'll stop sharing. And
no, that's great. That's great info. So there was a couple questions came in. I'm going to rearrange this one question a little bit because I think there could be others thinking it.
Sure.
Does AccrueMe help people or help fund people that are outside the United States?
Yes, we love sellers outside the United States. The only problem, here are 2 things. You need to be selling on Amazon.com. You could be on 10 different exchanges, but we only count Amazon.com. And we're able to segregate it, so it's not a problem. And the other thing is, and I'll give you something, Rob, that you don't know. We only work with, you have to have a business in the United States, which almost all foreign sellers do, because they got to deal with the banks and such. So you open an LLC typically in the United States, not a big deal. So that's all we require is you have a business in the United States. You can be an LLC. You can also be a corporation. So we just open that up just really right now to corporations, Rob. Yeah. So that opens up so many of our foreign sellers we were not able to work with because they were a corporation. And it took a long time for them to get the LLC going and all of that. It's such a pain. They want to be growing today, not 3 months from now. So now we're able to do business either way, corporation or LLC, but your business has to be in the United States. That's the only problem.
That's great. That wasn't available when I was there. So that's
literally just started the corporation.
Cutting news
Boom.
On the podcast.
let's do that press release.
Right. Okay. So there is another question that came in.
Before you do that, Rob, press release, just real quick. We issued a press release last month. 61% of our accounts are women owned and minorities. And, when you see the charts I just showed you and you see these businesses going up like that, it is so exciting to see. It's so exciting to see and help people really grow their businesses. So anyway,
that's excellent. That's great. Well, speaking of growing, there is another question. I know this one came up when I was there, but go ahead. Does AccrueMe provide venture capital outside of Amazon seller space? Other marketplaces, basically.
Yeah, good question, Jim. I wish we did. Right now, we don't. But this year, we will be opening up other marketplaces. We plan, right now, we're just Amazon.com. But we will be adding all the other Amazon marketplaces. We're also looking to add Mercado Libre in Mexico, and Walmart are the next ones on track. We're also breaking out some of our software technology because so many of our sellers have said, can we use this outside? Can we take this with us? And so we're breaking it out, and we're going to be offering it out on a free basis to all sellers. So there's a lot of opportunity, and what's in our technology, Rob. It's really valuable.
Good stuff.
Yeah,
that's great.
Everybody's going to get it.
That's awesome. That's really
it's pretty cool.
Very cool stuff.
Thanks for the question, Jim.
Great question. So everybody make sure you hit that like and subscribe. We do appreciate it. I appreciate it helping out the Sellernomics podcast.
You got to hit the like and subscribe.
Got to hit the like and subscribe. But we got a little bit more to go here with Don. We did cut in an early commercial, so we'll give Don a little more time here. So Don, I know for personal fact, because you and I've talked plenty, that Don's got an amazing background. We could probably do an entire show on Don's background. Really, it is super cool, a lot of fun. Getting more questions coming in, but let me just I'm going to throw this one up here because this is actually a great
Sure.
question. So, what are the minimum requirements to get started with AccrueMe? You did cover it a little bit. Why don't you just go over it one more time? Just a little highlights of the minimum requirements.
Sure. Stephen, I love the tie, man. I love the tie. So with AccrueMe, it's really pretty simple. We're down to really just two requirements: that you're in business for 6 months. We want to see that you're in business, that you know what you're doing, and that you're profitable. All right. We want to make sure that you're profitable. The other requirement is we go as low as 10,000. So if you have $10,000 of capital, we'll give you 10,000, or we'll approve you for 10,000. And the minimum first installment, if you will, that you could take out tranche would be $5,000. But those are the only two requirements. We used to require LLC. Now you can be an LLC or a corporation, either way.
There you go. Hopefully that answered your question. If you have follow-up, feel free to post it.
Yeah.
I would like to jump into Don's background. It is amazing. And I do have to make a quick note here. And I was just trying to look it up while I had you on here, Don. We do have coming up one of Don's, I don't remember David's actual role, but David's going to be on from AccrueMe coming up here on Tuesday, February 15th. He's going to be doing an actual presentation showing all kinds of detailed charts, how it works, results from it. He's going to go a lot deeper than what Don did. I wanted Don on to come and just kind of explain to everybody how it works verbally. But we definitely are going to have David on. He's going to be going really detailed. That is a Tuesday, February 15th. Make sure you tune in for that one. Best way is hit that subscribe. You'll get notified when David is on. There you go. But, David and Don have two different roles, two different amazing backgrounds. Go ahead, Don. I didn't mean to jump in on that.
No, you're good. And David Fryer, he's our head of sales. He's a true pro. And as you and I were talking before, Rob, he is a true pro, a great, great guy. I'm telling you, if nothing else, you should be paying attention and listening. And, you learn from people. He's somebody we all learn from all the time. He's fantastic.
I think he's going to end up taking over my show if I have him on too long, but
I think you're right.
So another question came in, and this is actually a good one. Do you partner with sellers long-term? Just kind of maybe explain that one more time, Don, on how that works.
I love the question, Luis. So, as long-term as you want, how's that for an answer? So we have sellers that are working with us now for 2 years that haven't made a single payment. And you can imagine what they're doing with their business, all right? They're on board for 2 years. They're clearly making profits. They are using our money and in most cases taking more, and they're growing like wildfire. Well, what are they doing if they haven't made a payment? They're looking to grow their business into an exit. So think about it. Let's say you're looking to sell your business right now, and you have an EBITDA of $100,000. Just keep it simple. And you're going to get a 4 multiple. So you're going to sell your business for $400,000. All right. Obviously, if it's $1 million, it's $4 million, but keep it simple. So you have an EBITDA. So your net profit after everything, $100,000, you're going to get $400,000 for your brand or your business. Great. But now, instead of doing that, you come to AccrueMe and you get this growth money, and you don't make any payments, and you grow the hell out of your business. And in a year, you turn your business and your EBITDA, your net profit, from $100,000 to $400,000. Now, chances are you're going to get a better multiple. You're probably not just going to get 4, maybe you'll get 5. So instead of getting $400,000, now you have a $400,000 profit, a 5 multiple. Now you're getting $2 million for your business. It's kind of crazy to sell if you could do that. If you could grow like that, double your business, triple your business, quadruple your business, and we have clients every year, all the time doing that. There's no reason why you can't. And then just being able to cash out for that kind of money. So we have clients, again, using us for 2 years so far. And plenty of our clients are using us for a shorter period of time, making no payments, growing like wildfire, looking to sell their business. And when they sell, what do we get? We get our initial investment plus our accrued profits, whatever they were. And they keep all the upside. We get no benefit We want to help them through it, but we get nothing out of it. It's your business. You keep 100% of the upside. God bless you.
That's perfect. Well,
yeah.
Look, we're going to have to wrap up here in about 5 minutes, which isn't enough time to go over Don's background. I got one more quick commercial break. I promise it's only about 10 seconds. And then we'll come back and we're going to talk to Don a little bit about his past, where he came from. We're going to also talk about how to get a hold of him. So stay tuned.
Great.
Today's episode is brought to you by GETIDA, the global leader in FBA auditing and reimbursements. Get $400 in free FBA reimbursements at GETIDA.com/Sellernomics.
So yeah, you can quickly head over to GETIDA.com/Sellernomics. I want to jump right into this, and questions are still pouring in, but we got it.
That's good.
Oh, actually, they said thank you for the answer from Luis. So he said great answer. So Don, give us I unfortunately didn't leave a lot of time for you, but give us your background. It's an amazing background. I'm sure there's other podcasts. Actually, there's a podcast I did with Don that talks a lot about its background that you can go check out. But Don, tell everybody a little bit about your background and what brought you to AccrueMe.
Well, I gotta make one suggestion. Please connect with me on LinkedIn. All right. You'll see my background.
I've got that ready already. At the end, see, you're ahead of me, Don. Don knows my podcast. I've got a whole thing for you on that. Tell us about you first, and then we'll tell them how to connect.
All right. Well, on LinkedIn, I have my whole background, so easy. But my background is really diverse and pretty interesting. I went from being a financial planner to building a large mortgage banking firm in New York State, one of the largest, and sold that. I started a mortgage broker franchise, never been done before, kind of like what AccrueMe is, never been done before, and built it to 760 units nationwide and sold that. Built a soccer publishing company and sold that. One after another, built one of the largest mortgage companies, again, with a tremendous team. One of the largest in the nation, the 5th largest direct to consumer. So like think about Rocket Mortgage. We were direct competitors with them, and the 6th largest wholesale mortgage lender in the nation, earning over $300 million net profit. Just to put it in perspective, I've bought and sold 300 houses in 18 months. I started an entertainment company out of the blue, never did it before. We did 8 feature-length films and the Broadway show Rock of Ages. We created and produced the Broadway show Rock of Ages, the 26th longest running play of all time. And the 8 feature-length films with Tom Cruise and Mark Ruffalo and Natalie Portman and on and on and on. A lot of fun. And I'm probably forgetting 100 things, including having my own ice cream truck and on and on and on. But I've done a lot of different things. And I ended up taking a break. And basically, my wife called it retirement. So I let it go as a retirement. I took 5 years. And then I learned about Amazon, and I learned about Amazon sellers. And we started looking into the options for Amazon sellers to grow. And we didn't see good funding options. So we created something that has never been done, something that we felt that if I was a seller, this is exactly what I would want. And that's what we created. It's all about the seller winning. And if the seller wins, then we win. And if you do really, really well, we do real well. It's fantastic. And if you don't do well, we don't do well. So, we're in it together. But you can use our money to grow your business like never before.
I'm telling you, every one of those things Don mentioned on his background could be a whole podcast episode. But today we are talking about AccrueMe, and obviously we're talking about Don Henig, co-founder of AccrueMe, and we're talking about how to increase your Amazon ROI by 50%. Don, I know people are going to have questions. I've got the screenshot ready for you. Tell them how to get a hold of you. Tell them how to get a hold of you on LinkedIn. Go for it.
Sure. So, again, I suggest connecting with me on LinkedIn. Yeah, it's my full name, Donald Henig. And, I remember when I got into this industry and I would try to connect with people on LinkedIn, and so many of them wouldn't even connect. Or if I would connect and then I would send a message, I would never get a response. Any sellers that connect with me, I connect with and I respond with, and I try to help any way I can, whether it be through AccrueMe or elsewhere. And, many, many people will tell you that's the case because it's just the way it is. My email is the simplest in the world, just Don, D-O-N, @AccrueMe.com. And if you go to AccrueMe, there's 2 key things that I think I would suggest looking at. Look at the calculator. so you can compare how you could do with AccrueMe versus on your own, and then fill out the fund, get a funding offer. It takes about 2 to 3 minutes. There's no big deal there. Get the information, put the information in. You'll find out real quick what we can do for you. And then, we'll take it from there. It's time to start learning and understanding your options. And if you want to grow, we can help you.
Absolutely. Absolutely. And by the way, that funding is not a commitment. It's just, the form is not a commitment. You're just basically connecting with them so somebody can get a hold of you, kind of go over your specific details with you. See, I'm turning back into the marketing.
Robbie, you got my back, man.
Right?
This is unbelievable.
Don,
great.
always
Thank
great
you.
having you on. Always amazing to have you on. And again, don't forget, everybody, I do have David coming up on February there. Make sure you subscribe to our channel. You'll get alerted when he's on. He's going to go into a lot more detail with charts and graphs and all kinds of examples. It's going to be really cool. And Dave is a great guy. I'm going to probably take a little bit to control that with him, the show, because he'll probably take over, which is fine by me because
he's great.
I'll just sit back and drink coffee and listen to him. So Don, great having you on. Always appreciate you coming on the podcast.
Robbie,
if I missed anything,
we love you, man. And we love seeing what you've been doing with GETIDA. It's really impressive. It's exciting. And we're big fans. Can't say it enough.
Excellent. I appreciate that. Everybody be sure to tune in. The podcast and everything's kicked back off every Tuesdays and Thursdays. Tuesdays are show us what you got. That's our demo type days. And Thursdays are standard podcast. Appreciate the heart. Whoever hit that thumbs up, hearts are always good. We really do appreciate that. Don, you take care. I'll be talking to you soon.
Thanks, Robbie. Love you, buddy.
All right. Bye.
Thanks for joining us this week on the Sellernomics podcast. Special thanks to our sponsor, GETIDA. Did you know that Amazon probably owes you money for FBA reimbursements? Get $400 in free FBA reimbursements at GETIDA.com/Sellernomics. Be sure to join us again next week for more great tips on how to grow your business. And thanks again for listening.